Let's get back to Leslie Picker. She has another special guest for us. Leslie.
Hey, David, thank you so much. Yes, I am here with Andrew Bednar of Perella Weinberg, the CEO there. Thank you so much for joining us.
Thank you.
You focus, obviously, on M&A. Global M&A totaled $2.4 trillion in the first 10 months of the year, down about 20% from a year ago to the lowest amount since 2013. At what point do executives just stop waiting for the perfect environment and start doing some of these deals that we say there's all this pent-up demand to do deals out there? At what point do they start actually doing them?
I think we've already crossed that point. We saw in the second quarter a real inflection in the dialogue, and I think there's a real divergence between the data and the dialogue. So the data is very clear. The M&A markets are down this year, and I think with 26 days left in the year, I think that statement will still be true at the end of the year. But the dialogue really changed in our markets back in the second quarter. That's been a steady progression. I think that at that point, executives and boards really declared that the waiting game is over in M&A. And we've seen a very nice progression up in dialogue, and we think that's a very good leading indicator for future announced M&A activity, which we do expect in 24.
In terms of some of the key hindrances, interest rates, geopolitical uncertainty, do executives need those to attenuate in order to really kind of officially consummate these deals? Or at this point, are they just saying, you know what, things are going to stay uncertain. We don't know what's going to happen with rates. We don't know what's going to happen abroad. We need to just do this now.
I think executives and boards have largely accepted that we're in a market of uncertainty. It almost goes without saying. So it's a quite overused term. I think it's the natural state of the world that there is uncertainty. I think what executives and boards have done is they've adjusted to uncertainty. They've been looking at the range of uncertainties and moving in the face of those uncertainties rather than waiting. And I think waiting at some point does become a decision, and that decision is proving to be more costly as people wait for better conditions. And instead of waiting, they're moving ahead in the face of those risks that you mentioned. And there's always going to be headwinds around the transaction markets, whether it be around M&A or financing or around the liability management and restructuring markets. But you have to move in the face of headwinds. Always, I think executives are charged with growing their companies and building value, and they'll continue to manage through uncertainty, I'm convinced, without hesitation.
What about the regulatory uncertainty, though? Because I sat down last week with Jonathan Cantor's deputy, Doha Mekki, at DOJ, and she talked about the administration's bias toward action, even if that means occasionally losing in court. That was a direct quote. So what effect is that having in the boardroom in terms of deterrence?
So the regulatory bark has been quite loud, and it's meaningful, and it has, I think, affected behavior for sure. But the bite has been quite manageable and I think quite minimal. So if you look at the number of transactions that have gone ahead and that have announced and closed, it is significantly higher than transactions that have been challenged by regulators, and even significantly more that have closed versus those that have been blocked by regulators. So the posture that's been taken by regulators is very real, and it is affecting boardroom decisions. Some of the decisions will never even see the light of day, so we're not able to observe and measure the transactions that aren't coming to market. But those that do come to market, I think, again, the bite is very manageable. I think it's taking more time. I think that transaction participants need to be more thoughtful and careful about how they present their case to regulators. But overall, I think that's time and money and more thought. It's not completely killing the M&A markets. The idea that M&A would die at the hands of regulators is just not true. We don't see any evidence of that. We just see a different regulatory posture. And again, I think that our clients are managing through that quite well.